Times Decrypt, an initiative by the Times of India and powered by CoinDCX. Times Decrypt, your go-to platform to learn everything about the world of crypto.
Hello and welcome back to Times Decrypt. I am Partha Sinha on Times Decrypt. In the budget this year, our Finance Minister Nirmala Sitharaman proposed to introduce some taxes on cryptocurrencies. To take us through the details of those proposals and the probable implications, I spoke to Sumit Gupta, co-founder and CEO of CoinDCX. Sumit, welcome to Times Decrypt. To start with, could you please tell us about the tax proposals in the budget for the cryptocurrency sector?
Sure. First of all, Partha, thank you so much for having a part of this podcast. Really excited to be here sharing this with you. In terms of the recent announcement in the budget, right? So there were four major things that were announced. One was to propose a flat tax rate of 30% under the section 115 BBH. What that means is that any crypto profits that you have made, you will have to pay a flat 30% tax on that. There is no carry forward, no offsetting allowed. The second proposal was on this TDS part. So 1% TDX has to be withheld by the exchanges or the users, depending upon. Right now there's still some confusion there in terms of wordings. So that was on the second part, the 1% TDS, under section 194O, 194S. And then we'll cover the details later on. Third part was on the gift. Whenever you received crypto as part of a gift, there is going to be taxation allowed, which is again a flat 30%. And then the fourth thing that they have done was introduction of the definition of cryptos in government terms, what they're calling it as virtual digital assets, VDAs, right? And they have covered anything and everything which is encrypted and, a part of this except the CBDC, because government is also coming up with their initiative on the CBDC front. So excluding that, whether it is NFTs or any digital assets, that is emerging out of this technology, they are calling it under VDAs, right? So that it covers the entire spectrum of all the whatever the utility or use case may be. So these are the four major announcements that came in the budget speech.
For you, which is the most important? More important for investors? And on the other hand, the exchanges.
Okay. So very, very good point. In terms of exchanges, right? Let me cover to the exchanges part first. And ultimately both will affect the end users as well. Now, how it will get, they'll get affected, we'll cover the details of it. Now, talking about the 1% TDS. Now, the way we have interpreted is whenever someone does a trading in crypto, and a lot of this volume that you mentioned, right, which is a very high volume, all of that is governed largely by traders, people who trade very frequently, maybe does 5, 10, 50 trades in a month, depending upon their risk profile. So what happens is that if you start with, let's say, a 1 lakh rupee investment in crypto, and if you have to pay 1% TDS every time you place a trade, that means 1,000 rupees will be withheld, right, as part of TDS. Now, you place one trade, 1 lakh rupees, whether you make a profit or not is secondary, but आपके 1,000 रुपए वहाँ पे lock हो जाएंगे, right, which you can of course claim it, but आपका net capital बचेगा 99,000. And then you make one more trade, and then उसमें से फिर 990 rupees वापस से withheld हो जाएंगे. So if someone is doing, let's say, through 200, 300 trades in a month, their entire capital will get blocked. Their entire capital will get blocked, और आपको जो capital trading के लिए वो कम होता जाएगा. इसके बहुत सारे नुकसान हैं. एक तो that's going to increase lot of work for the taxpayers as well as for the government, because a lot of claims will happen because people do not make that much money जितना वो TDS पे करें उससे कम कमा पाते हैं, right? तो एक वो challenge है, and a lot of refunds might come. Second is this is going to block the capital for the traders. Now, when the capital gets blocked, they'll not be able to place more and more trades, and ultimately their appetite to make returns or profits will go down, right? Plus, the revenue that the government can collect from this trading activity also drops, right? Because now people are not placing as much trades as they were doing earlier, and the government will also end up getting less revenue from this activity, because for traders, their capital is getting blocked and the trading utna hoga nahi. Trading utna hoga nahi, to people will not be able to make maybe that much profit, or people will not be able to pay commission to exchanges. Uske wajah se sara depend karta, like how much revenue the government is collecting. So this is basically the downside. If you have, and worst case, like there's a lot of people who actually do trading very frequently, they might not even trade because यहाँ पे इस asset class में capital block हो रहा है. They do 100 trades, उनका capital wipe out हो जाएगा, right? And
capital is blocked, and the traders, they do not earn any interest also on it.
No. I mean, you do not earn any, the capital is getting blocked. So pura trading activity will go down over time. So next second, the other point is, in every market, in every capital market, there are market makers, right? People who come to the market, participate and add liquidity there, right? You can relate to it. For example, in NSE, a lot of market makers who do market making and add liquidity to the markets. Now, whenever a market maker, how they operate is they sort of bring a capital and then they place multiple orders in the order book, so that agar koi buyer aata hai, there is always a person on the other side who will match this order. Now, because market makers also operate on a very thin margin, they do it just to facilitate the orders, and they earn maybe 1 basis point, 2 basis point, 5 basis point margin on every trade. They will not come and do market making in this, because your profit is this, single digit basis points, but your 1% capital is getting blocked. So they will not be doing market making. When you are not doing market making in this, the liquidity from the market will go away. When the liquidity of the market will go away, investors will not get a good pricing, and the spreads will increase, right? So these are some of the nuances that will happen if you place 1% TDS, which is not, which will not bring in liquidity to the market, and ultimately the end customers, people like you and me, will end up paying a higher price, right? Because the liquidity is not there in the markets, right? So this is one challenge with the TDS part. The second part with the with the 30% flat tax rate, 30%, first of all, it's on a higher side, and it is currently considered like a speculative income. Now, one thing I want to highlight, double down, is if anyone goes and tries to understand, into the crypto space, these crypto tokens, coins that you have, right? They are solving a use case, right, in the decentralized world. Just like we have companies, who are traded in its stock market. Similarly, here there are, cryptos which are being traded, and every crypto is solving a particular use case. Like Bitcoin is solving a use case, Ethereum is solving a different use case, IOTA is solving a different use case, basic attention token is solving a different use case. So, everyone has different use cases, and depending upon the adoption and traction of these projects, the prices also goes up and down. It's a function of multiple factors. Every project also has some sort of, on the blockchain, you can see, how much that project is getting adopted, what is sort of development rate, how many people are actually buying and holding it, how many people want to be a part of the networks, what is the demand and supply, and based on those fundamentals, the price also goes up and down, right? If, let's say, a project is being, they've done a partnership with a major player, major company, that basically shows that they will get more adoption, and the price also goes up. If a token gets listed on any exchange, the price also goes up, right? So it follows a similar pattern like what happens in the equity markets as well. Of course, the nature of the asset class is a little different, but overall, if you look at the audience, the people who are doing in equity markets, a lot of people also trade in crypto, right? People, just like how stock trading works, obviously the difference is like that works for a specific duration. Yahan pe it's a 24/7 market. There is no upper circle, lower circle. So there are a lot of similarities, some nuances which are specific to crypto, but this is how it operates, and you can also go online and look at the financials of how this project is performing, how much this project has earned. If you look at Ethereum, for example, Ethereum's ARR is $16 billion. This is basically the run rate of that particular project, and this 16 million revenue that the protocol has earned is actually that revenue is being passed on to the miners. People are holding Ethereum, right? They're staking awards. So basically, obviously nature of company is different. It's just that there is no CEO or a CTO or CXOs in this. It's more like a community centric, but the nature you can draw a lot of similarities in this, right? So that is also one way how the price fluctuates. So given the market also follows a similar pattern, a 30% tax rate, right, and treating crypto as a speculative asset class is something which is not fair, right? And if someone spends and studies about the subject, they will understand, okay, how are the prices determined, right? Of course, there is an angle of speculation, but that is there in equity markets as well, right? People also speculate. There are fundamentals in equity. Here also there are fundamentals. So why to treat equities separately and have long-term capital gains, and cryptos at 30% is something which is not good for the industry, for the ecosystem as a whole. Then the second point being that no offsetting allowed, no carry forward allowed. And if you're running a business, right, in crypto, and you have a team of 10, 15 people who are doing some venture and they are doing trading, you have to have an office space, you have to employ these people. That is also a part of the expense. And if you are not allowed to, those expenses are not allowed to be considered, then that's going to demotivate a lot of people to do businesses in this space, right? So overall, I feel that even though texting of virtual digital asset is a great step, it was long awaited, and overall it gives a lot of clarity. I think the way it was treated in terms of flat 30% tax rate and no carry forward, no offsetting, 1% TDS, all of that is a little dampener to the industry, I would say. So we hope that over the time, government will look at this, consider it, and then will come up with more sort of lenient guidelines and then treat it at par with other asset classes so that the industry continues to grow in an organic fashion.
I wanted to know how you are now addressing the two very important stakeholders. You in the sense the exchanges. One is the government and one the investors.
Sure, absolutely, Partha. So
relating to this tax proposals. Yeah.
Sure. So, overall education continues to remain a very important focus area for the company, whatever tax guidelines are there. We have done a lot of live sessions, webinars where we educate our audience, our users about what does it mean for the end customers and how does it affect them. That's something which is regularly happening at various intervals. We have also published blogs and then kept it simplified it a lot extent so that a normal customer can also absorb what it means. 1% TDS, how does the calculation happen, the tax rate, and giving some real life examples, and then with actual numbers. So wo pura humne kiya hai. We have also published it in the product itself. We have placed that banner so people can click on it and educate themselves about it. So this is something that we are doing on the investor side. Again, apart from that, we are also talking to our users on a regular basis so that they continue to remain at top of the development that are happening in this space overall, especially on the taxation front, right? So that educational side we have covered and we have been doing pretty actively that part, and we'll continue to do that, right? On the industry side, all the industry peers, and companies are working together on this and also trying to, explain our point of view. How does the industry think about this development? What are the challenges with the current tax provisions? How it will impact the industry? How it will incentivize the market makers or people who are trading actively? Why 1% TDS is detrimental to the growth of the industry? All of that is something that we are actively doing, and then talking to different people within the government so that they also understand the repercussions of such onerous provisions with respect to crypto. Overall, net, we would want India to be a leader when it comes to crypto and blockchain technology, and why such onerous tax provisions is going to dampen the growth of the industry. That sort of communication is happening within the government, and we hope that the government will consider our suggestions and they will revise these tax guidelines in the coming months.
So this is happening from at the exchange level. You are communicating with the investors, and at the industry level, the bodies, the industry trade bodies, they are probably talking to the government. So this is what you are saying.
Yeah, we are trying to share how will it impact the market? How will 1% TDS, flat 30% tax rate, no offsetting? How is this going to impact the market? That sort of a communication is going out from the industry side. I am also the co-chair at BSEC, which is the industry body. So we are proactively working in that direction.
Okay, right. Great. I mean, more or less, this clarifies a lot of things. The tax implications and tax proposals, their implications, and what you are doing actually for this. So thanks, Sumit. Thanks for coming to this podcast. And it's really great talking to you. And hopefully we'll come back again, and we want to see that government actually listens to it, and the government and the investors and the exchanges, all three, they actually get together and develop this thing. Thank you very much for this.
Thank you, Partha. Thank you for having me on the show. Thank you so much.
Thanks a lot. Okay, so that was Sumit Gupta talking to Times Decrypt about the recent budget proposals relating to cryptocurrencies. Times Decrypt is an initiative by the Times of India and powered by CoinDCX.
To learn more about the world of crypto, follow the Times Decrypt column in the Times of India newspaper every Tuesday, or visit www.timesdecrypt.com for expert advice, discussions, and latest updates.